Hello guys, welcome back to my channel, and in today's video I am back with the monthly series of stocks that I am watching this month to potentially add to my portfolio. I will first do a small recap of how my stock picks have been doing since my video were posted, and then I'll talk about the 3 stocks that I'm watching this month. Please smash that like button and subscribe since it really helps my channel out. And also, if you haven't signed for WeBull yet, make sure to do it and claim your 2 free stocks after depositing $100. One of those 2 stocks could be worth up to $1,400. Link is down below in the description. Now let's start with the video. In my May video, my stock picks were MasterCard, Alibaba, AMD, Berkshire Hathaway, Uber, and Lyft. Since then, MasterCard is up more than 20%, Alibaba 35%, AMD a whopping 63%, Berkshire Hathaway 10.10%, Lyft 17%, and Uber 7.30%. Remember, this is since May 7 when my video was posted. Then in my June video, my stock picks were American Express, Alibaba again since I thought that it was still at a very good price to buy, Starbucks, Square, and JP Morgan. Since then, American Express is actually down almost 10%, Alibaba up 19.94%, Starbucks down almost 6%, Square up a whopping 48.78%, and JP Morgan is down by 8.36%. As you can see, you win some and you lose some, but if you are investing in the long term, these 2 month moves should not mean anything to us. Lastly, in my July video, my stock picks were Qualcomm, ICE, Six Flags, and Microsoft. Since then, Qualcomm is up 20.89%, ICE 3.88%, Six Flags is down by almost 10%, and lastly, Microsoft is up 2.25%. What I do want you guys to take into consideration is that you should always think long term and don't let short term moves to affect the way you think about a stock, unless something really bad happens that changes the company fundamentals. I'm saying this because with current market conditions, you can be up 10% in a day and down 10% in another day, when generally 10% is the average yearly return for the stock market. Obviously, banks, retails, restaurants, and the tourism industry are still getting hit very hard, and as you can see, those are the stocks that are still down, while e-commerce, fintech, semiconductors, and tech companies such as Alibaba, Microsoft, AMD, Square, and more have actually benefited from the pandemic. Let me know in the comment section below if you like this type of recap from my last stock picks. I'm planning to do it only for my previous video, but since this was my first time, I decided to do a quick review of all of them. So let me know what you guys think about them. Let's get right into this analysis with my first stock pick for August, which is the almighty Alphabet Inc. Class A stock, ticker symbol GOOGL. This is a stock that I have always had on my watch list but have never bought and don't really know why. Sometimes I get distracted with other investments opportunities and forget about the strongest stocks. As I said in my Sunday's video, the FANG Group stocks, Facebook, Apple, Amazon, Netflix, and Google, and I would add Microsoft, are stocks that you should always take into consideration when investing, since these are huge companies that have been around for years. They dominate the tech world and do not see them disappearing anytime soon. But let me analyze Google first, and then I'll explain why I decided to pick Google over all of the other stocks I just mentioned. Google is currently trading at a price of $1,479, has a market cap of just over $1 trillion, and has a PE ratio of 32.52. In their quarter report, we can see that their revenue for Google search decreased to $21 billion. Obviously, as an investor, I do not like to see a decrease in their biggest business, but it has been a rough quarter. A lot of businesses had to close, and big companies in the tourism and retail industry, for example, had to cut or reduce their advertising expenses during the pandemic. Their YouTube ads business stayed almost flat, but something that I really liked was their cloud business. It increased 43% year over year, and this is a business that has the same size as their YouTube ad business and their Google Network Members property business. Overall, they posted a revenue decrease of almost 2% in comparison to the same quarter last year. It was the first time in history that Google posted a decrease in revenue, and that is why the stock dropped a lot. Is that detrimental for the company? No. we are in the middle of a pandemic and a lot of companies had to stop or reduce their advertising expenses, affecting companies like Google. Obviously, this is a growth stock and I do expect to see a switch on this to an increase as soon as possible. Let's take a look at their balance sheet. We know that Facebook has one of the best balance sheets I've ever seen, and obviously I like to compare it with Google because they have kind of the same business and customers, just that one focuses on social media and the other one on a search engine. But in general, they generate money the same way. As you can see, their total assets actually increase a little bit and their liabilities actually decrease. They have total assets of $278.5 billion and total liabilities of only $71.1 billion. And this is actually what I call a strong balance sheet and why I said that you should always have these type of companies under your radar. Now, why did I decide to add Google to my watch list instead of the other FANG group stocks? I'm already invested in Facebook, Microsoft, and Amazon. So between Google, Netflix, and Apple, I think that right now Google is the best price stock with the best return potential. Don't get me wrong, Apple and Netflix are offering huge potentials as well, and more after Apple posted huge earnings. But right now, I think that Google is a better price point in comparison to the others. Also, I do think that this is a company that will benefit a lot when travel comes back to normal, when we see cruise lines, hotels, and airlines back to normal and doing advertisement again. My second stock in this list is Lemonade. Ticker symbol LMND. But first, quick reminder here guys, remember that I created a completely free Discord group chat. The link is down below in the description. Now let's go back to the video. I do have a full video analyzing in depth this stock, but gonna do a quick review for the sake of this video. This stock is an insurance company that is implementing technology and artificial intelligence into their business, disrupting and revolutionizing the insurance industry, which in my opinion is long overdue since it's really old. I mean, the biggest players in the industry have been around for over 100 years and they all benefit from not paying their customers' claims, and Lemonade wants to change that, since how they work is that they just grab 25% of your monthly payment as a flat fee and then 75% left they save it for claims or reinsurance. Then at the end of the year, if there is money left out of that 75%, they donate it to a charity of your choice. And I mean, I'm sure that most of you have had an accident where it wasn't your fault or something happened in your house and the insurance decided not to pay for it. I've been through that. I remember when the Hurricane Irma came to Florida, a tree fell on top of my parents' house and broke all the screen structure in the pool and part of the roof. Maybe I'll post a video or a picture if I found one, and the insurance decided not to pay for it. And that is why Lemonade, in my opinion, is trying to disrupt that insurance industry, because they are not making money from not paying your claims. As I said in my video, this is a brand new company that is still not available in every single state, so it has a lot of growth potential in both the United States and Europe. Also, they are only offering 3 servers: renters insurance, homeowners insurance, and pet insurance. So they can still grow even more by offering auto insurance and life insurance, which both are huge industries and will for sure help them accelerate their growth. If they're able to achieve what they want to do and disrupt the insurance industry, it will take them through the roof. Obviously, this is a stock to buy, hold, and do not check it for a long term, because obviously it will take them a long time to do all this. And also take into consideration that it's a brand new company and they just went public, so I expect to see a lot of volatility throughout the next months and even years. My plan is to increase my position very slowly. As I said in my video, I only bought 2 shares to track the stock price. I might add a little bit more, but really want to wait until their lockup period expires, because generally we see a lot of volatility after that and do not want to have a big position during those times. In my opinion, this is a high risk but high reward investment, so do your due diligence before investing in anything and take into consideration what is your risk tolerance. My last stock pick for this month is Lyft, ticker symbol LYFT. This is a stock that I started buying back in February and has been in my stock picks for 2 videos, I think. The growth that this stock has been having is impressive and is offering a huge growth potential in the future. Obviously, we have to take into consideration that we're in a pandemic and during lockdown, People stop going out, so the demand obviously decreased, and that is going to be reflected in the revenue. As you can see, their revenue has been massively increasing over years. It increased 95% from Q1 of 2018 to Q1 of 2019 and 23% from Q1 of 2019 to Q1 of 2020. Obviously, 23% is not as massive as 95%, but 23% is still a huge increase for any company, and even more during a pandemic where your industry got highly affected. Obviously, I do want to wait and see their earnings report for the second quarter to increase my position and analyze their performance, but I already read that they were able to reduce costs during these hard times that will for sure help them be profitable sooner than later. At this moment, I have under my radar more Lyft than Uber just because of the potential growth. Lyft is only available here in the US and Canada and are still posting huge growth year over year. Just imagine what will happen when they start in Europe or Asia. Let me know in the comment section below what you think about these 3 stocks. As always, I'm not a financial advisor. Do your due diligence before investing in any of these companies. Please smash that like button and subscribe if you enjoy the content, since it really helps my channel out. Thank you and see you next time.